What's going on, guys? Philip at Trade Genius. In this video, I want to talk about a level that's coming up that's going to be the level that Bitcoin never looks back from. So in other words, once Bitcoin clears that price level, we're not going to see it go back under that price level. I'm going to show you some examples of how that's happened around the previous halvings. So now we're in our 2020 halving, beyond it actually, but I'm going to show you how that works. So we're going to dive into that in this video. So let's do it.
Trade Genius.
Guys, really briefly, we're going to extend the special one more day. I asked them to push it out one more day just because of all the craziness going on in the weekend. But our May special, $3.99, gets you the ribbon system and the trade sniper. And I've showed you guys how that works on the charts. Pretty deadly indicator. And our latest creation, I think, is the most accurate one to date. $3.99 gets you in the room for a year. Me and Bob, all the intraday signals, binary options, stock ETFs, of course, crypto. So check that out. Get in on that before that expires today. $3.99. That's a great deal. This particular package won't be around, so that's an awesome bundle. Encourage you guys to check that out. All right, diving into the chart now. So what you do is you're going to take the Fib tool, and I have it set up so it just shows me the 50% retrace. And what you do is you look at the peak before the halving. So that's going to be this area here, because this is the peak before the 2012 halving. Then you're going to look at this area here, because that's the peak before the 2016 halving. And then the most recent peak with those crazy all-time highs at 20,000 is the peak before this halving. So what you're going to do is you're going to take and draw a Fib retracement from that peak to the low of the move. Okay? You're going to do that. And this is how I have my Fib tool set up for that. So you're just going to check off the 0.5. You can save this template, whatever you want to call it. You can save that template because it's nice to have one that just pulls a 50% mark. It doesn't look like 50% on the pool because this is a logarithmic chart, so the scaling is a bit off. If this was a linear chart, that line would be right in the middle of these two pools, but we're trying to fit all of the price into one viewable chart, so it scales it. We're using the logarithmic, so that's why it looks a little strange there, but trust me, that's 50% of that low to high, or high to low. All right, so we're going to do that again. We're going to do that here, and we're going to draw that down to here. Okay, so we have that one there. Last but not least, our highs up here down to our lows. So we're going to pull from this point here down here. Okay. All right, so let's talk about these numbers. If we look at our first pull, we do this exercise. This is how this works, or how I view it, is you do it on the weekly chart. You want to look, it really to me confirms when you have 2 weekly closes above that line. Once you see that, then you're good to go for a long swing trade and you shouldn't really see any drawdown. So for this price level, this first exercise was $16.95. Had you had gone long from 1979, basically that week's close, the following week where you had that second weekly close, that's where you're looking at some pretty ginormous gains. Price range from that level, obviously, this, I'm just showing you this, you guys know, but that's a 5,647% gain. So pretty incredible. Okay, and then if we take that same exercise, we go to this level here. So from high to low, 50% is $670.54. Now you notice we broke above it, but we did not get a second consecutive weekly close, right? And then we just hit our head on it. So it became resistance. And then we pulled back. And then finally here on October, the last day of October 2016, we got our second weekly close above it. So we go ahead and we get long here at approximately $717. And that gives us another awesome long-term swing trade, right? So this is for like the HODL stash of 2,676%. All right, so again, monster returns. And you're not having a very long hold. That last hold was, not even a, basically you got long toward the end of 2016. So, about a 2-year swing trade, less than. And for those kind of returns, people would kill for that. Okay, next one, last one that we've had. High to low, 50% gives us 11,088.87. And now you're going to look and see we came right up to that. We peaked over it, remember? And that's what was impressing me about that move that week was we got up to 14,000. I was like, man, if we stay up here, we're going to break that rule real quick. We didn't do that though. So again, we did not see 2 consecutive weekly closes over that line. We got close to it, but we never got the 2 consecutive. So we failed that level because you'll notice too what's happened in the past. If you don't get above that and you come up to it the first time, a lot of times what will happen is you can basically turn that into resistance and then it falls over or rolls over. So the action here is very bullish, and I think any dips, pullbacks in this current range, and I know there's a lot of craziness going on in the world right now, and the fundamentals don't really seem to make a lot of sense for getting bullish on any kind of asset class. But you have to understand, the Fed has no hesitation on flooding the system with liquidity, and that spills over into Bitcoin as various firms are long exposed to Bitcoin institutionally. So here we are. Basically, we're going to be looking for that second weekly close over that. Now, price could come up to this level, hit its head, but essentially once we poke above that, we get that second weekly close, whatever that is. If we start and we take some numbers, let's just say hypothetically we get the green light here at about 11,881, and you can see that even if we go up to 100,000, okay, that's only a 758% gain from here. It's just that we're dealing with way larger numbers now, right, than before. It's just the percentage gains are going to be smaller, but your US dollar gains are going to be much, much, much bigger. And this is where people's, when we start getting into these valuations, that's where it's kind of mind bending and it kind of goes against what people think is doable. But you have to also keep in mind that the price action on Bitcoin is such that when we do go through these halvings, it's a disinflationary event into rising demand. And now that it's solidified its status as a gold 2.0 primarily, I don't see any reason why the math just doesn't play out and we do start grinding higher. Now, as far as like the really high valuations, like $1 million Bitcoin and stuff like that, I mean, I think that would take a while unless we started to get into a hyperinflationary environment, which that can be a slippery slope. But usually on the larger countries like the US, that's something, even though with a lot of printing, I think you can look at Japan where, it didn't turn into a super hyperinflationary environment, but, the buying power of the yen surely went down. And, the dollar's probably going to be facing a similar plight. So it is very bullish for Bitcoin, but I think $1 million Bitcoin would be quite a ways down the road. But, as you can see, things develop quickly in our times now. And so I'm not going to put a cap on that. The upside potential for Bitcoin with everything that's going on is really a perfect storm for this vehicle. And so I think you'd be crazy not to be having some long exposure to Bitcoin in some capacity, whether it's a little bit or a lot of bit. But the upside story here, I think, is hard to fight. So again, that 100K. If we look at some of the stuff that's telling us we're probably going to get up to more like 250 to 300,000 at the end of this next cycle. I mean, that's more along the percentage terms that we would be expecting out of these halving cycles. Let's just say last time we were over 2,000% return. Let's just say we do like a 1,500% return or even 1,000% return. You're still well over 100 grand in that. So I think 6 figures is definitely doable from what we've expected to see as far as returns go from these halving events. Yes, they are percentage-wise, they do diminish because of the price levels that we start getting into, but the dollar gains are undeniable. So anyway, guys, that's a little exercise that I wanted to show you guys. Again, our never look back price, $11,088. 2 weekly closes above that level, and it's blast off time. And I don't expect us to see a dip below that level after that. So that's what's been working. I don't see any different. And I think also too, price getting back above that level probably coincides with a lot of the bad news being behind us. So that to me also is a barometer of Bitcoin taking off, economy getting stabilized. And usually when you see that coming out of these types of scenarios with the economy, things like gold and now Bitcoin, being that it's finally around for one of these global type events, I think you'll notice they'll start to break higher first and then really have a good run out of these types of economic recessions, depressions, whatever you want to call it. Not exactly sure what we're going to have out of this. A lot of uncertainty still up in the air, but look for those commodities to do very well out of this. All right, guys, that's it for this video. Appreciate you guys watching. Please hit like and subscribe. Catch you guys on tomorrow's video. Also, if you're interested in our products, head over to that website, tradegenius.co or tradelikeagenius.com, either one. And but check out that $3.99 special. I think it's loaded for this month. Expires tonight. Thanks, guys. Talk to you later. Bye-bye.
Trade Genius.